limited or unlimited liability. They're just as much responsible for the profits as they are for the losses as well. This can be damaging because they can get an understanding of where you are doing well and where you're falling short on. Hello and welcome back to The Culture Business. On this channel we talk about the sort of business topics that you don't usually get on every single social media account or YouTube account. But in saying that, today we are going to talk about the basics of business. One of the basics of business, which is what's the difference between a limited company and an unlimited company. Specifically, we're going to be talking about 2 out of the 8 different types of companies that you can have in the UK, which is a private limited company and an unlimited company. One of the key terms in this video is going to be liability. And when we say limited or unlimited company, we're talking about limited or unlimited liability. Liability is where once the business has stopped, if the business fails and goes under, how much money does the shareholder or owner have to pay to, say, contractors or employees before all the business dealings is up? Businesses can go bankrupt just as much as humans can, but the laws around them are slightly different, so that's what we're going to sort of touch upon today, and perhaps say whether you should open a limited or unlimited company. Firstly, we're going to talk about an unlimited company. These companies are likely to be smaller because when firms get bigger, there is more assets or cash tied up within them, so when this can become negative or positive, you need to protect yourself against it. So with a smaller firm, there's less likelihood of this damaging your personal finances, so why would you create an unlimited firm in the first place? Creating a company means you have a legal entity that's separate from yourself, and this is important because you can have different tax restraints with a company, you can have different banking laws and even employment rights. So let's say you're a freelancer that needs to employ someone. If you're employing them directly from you, then you have to pay them a salary and in remuneration for their work. But if you employ them underneath your company, then this means you can give them, for example, equity as a remuneration, which means that they don't necessarily have a salary which they have to pay different taxes on. They can come under as a shareholder, and then you'll be able to also reduce your liability. They're just as much responsible for the profits as they are for the losses as well. Just quickly before we go on to limited companies, quickly go off full screen mode and give this video a like, it really helps me out. A limited company then is very similar to this. The only main difference is that when a business goes under, the personal finances of the shareholders aren't at risk. A business entity can declare bankruptcy separate from the individual. They don't have to declare bankruptcy as well. As I said earlier, bankruptcy laws apply differently to firms. So a business can go bankrupt, and then a person who was a shareholder in that business could still go and start up another company. Limited liability separates a business and your personal life, so a stain on your reputation and finances is avoided. The catch then is that as a limited company you need to be registered with the government. In the UK at least, you need to provide business address, your business activity, the details of any shareholders, and also the details of anyone with a controlling influence on the company. The business also needs to make a lot of their financial information public, and when competitors can get hold of your yearly income statements, this can be damaging because they can get an understanding of where you are doing well and where you're falling short on, and their strategy can adapt to that. In terms of the registration though, in the UK the yearly fee I think is about £10, so you're not likely to be breaking the bank if you wanted to protect yourself and you weren't worried about competition. So if you're thinking about starting a company, should you have an unlimited company or a limited company? Well, it's really all about your personal preferences, how much you want to risk, and also the size of your company at the moment. Remember, you can always change from being an unlimited and a limited liability company. If your company is larger than you want to risk on your personal finances, then a limited liability company is one for you. But if you're also worried about your information being put out to the public for your competitors to get hold of, then perhaps an unlimited company is good while you grow. Interestingly, it also means that it depends on how many shareholders you have in your business. If you have a lot of people to share the debt, then maybe it doesn't matter that much to you. As a quick mention at the end in a video I might make in the future, the difference between a limited company, a private limited company, and a public limited company is simply that the shares that the shareholders can buy are either given to you directly from the company, or you can buy it on an open stock market. Basically, a member of the public can own shares in a public limited company, but in a private limited company, you have to directly go to the owners of the business. So there you have it, the 101 on the difference between the limited and an unlimited liability company. Obviously, there are 8 different types of businesses in the UK, as I mentioned earlier, so this isn't by any means a comprehensive review, but at least you can get a little bit of an understanding about your options when you're going out into starting a business. If you found this video useful, please subscribe to the Culture Business YouTube channel and ring the little bell icon so you get a notification every time I post, which is Wednesdays at 1 o'clock. Also, if you don't want to subscribe on YouTube, go to Facebook, Instagram and Twitter, because I'll be posting all throughout the week and let you know when a new video is up. But other than that, remember, business isn't all about profit and loss. Thank you for watching and see you in the next video.